This is the Better Life Podcast, where we talk about real estate investing, building wealth, and all in all living a better life. My name is Brandon Turner, and I've spent my life investing in real estate to achieve financial freedom. And alongside my co-host, Mr. Cathcart, we want to help you do the same. On the show, you're going to hear from world-class guests who have been handpicked to help you level up your investing, your leadership, your goals, your habits, and more to become the very best version of yourself. So join us as we explore the habits, the actions, the beliefs that it takes to build wealth through real estate investing without losing your soul. What's going on, everybody? Thank you for being here today. I'm going to talk to you guys about how to invest in real estate no matter how much money you have. Specifically, I'm talking about $700, or maybe you have $7,000, $70,000, $700,000, of course. Without further ado, first one, $700. First thing to understand is that $700 most likely, unless you are a military veteran, which I don't even have that as an option on here, but is one of my 4 points. But if you're a military VA, you can get a 0% down loan. So $700, more than enough to buy a primary residence, like a house or a duplex. If you're military or you're former military. Let's just assume that most of you aren't, so I'm not going to spend a lot of time talking about that. So the first thing to realize is that $700 is not enough for a down payment on pretty much any property that you're going to buy. Therefore, the first point is when you have $700, you want to pay for events and education. Now, I'm not saying go pay $40,000 for a group coaching thing or a big coaching program. I'm just saying, like, you got $700 right now. It might be worth going to the library and picking out a couple books. Right? Like, buy the gas to get to the library. You need to conserve your money, you need to save your money, but $700, you're gonna get some books. You might join the Better Life Tribe or another, real estate mastermind where you get around people. You might pay for a conference, right? Like, we have a big real estate conference every single spring with the Better Life Tribe, right? Tickets are right around $700, give or take. So yeah, you might pay for something like that because at the beginning, when you don't have any money, you need to elevate your skill set and your mindset. That's the most important thing you can do, is elevate skill set and mindset. How do you do that? By getting around people that have an elevated mindset and a skill set, and then by practicing. It doesn't take a lot of money to practice, which I'll cover in just a few minutes, but $700 is, if you have that, definitely focus on paying for events and education. Also, focus on being the best at finding deals. Like I said, elevate your mindset, your skill set. You need to practice being great at finding deals. In today's market, at least, in this crazy market we're in right now, it is very difficult to find good deals. So the person who can find great deals in this market, those people hold the keys to the kingdom. They have the asset. And when you're broke with $700, chances are, this is not always the case, so it's not always the case, but chances are people with $700 are usually younger and they have more time. Like, as you gain age and education and experience and all that, you start getting more money. So most people with $700 probably have a decent amount of time. You might not feel like you have a lot of time. Pull up your phone, look how much time you spent on your social media over the past 7 days. That's how much time you have to learn how to invest in real estate. Now, if nothing else, right? Forget everything else you do. So focus on using your time to get good at finding deals. Finding good deals is really just about luck, but luck being an acronym. And it stands for leads at the top. What is a lead? It means a potential seller who wants to sell something. There's a lot of ways to get leads. It could be anything from like direct mail, which is like you send a bunch of letters. It could be driving for dollars, which is where you get in your car and just drive around and look for nasty properties. It could be looking at foreclosures, talking to wholesalers. That's a good one. Wholesalers are people whose full-time job it is to go find deals. So basically that's what you're trying to do too, but you can network with them and sometimes you can partner on a deal if you can find a buyer or whatever. You get leads coming in no matter how you get them. Then you're going to underwrite them. Underwrite means to analyze, to run the numbers, but it's not just the numbers. You're also looking at the market, the condition of the property, things like that. But underwriting just means you're going to evaluate it to decide if it's worth pursuing. So you're going to get leads, you're going to then underwrite some, then you're going to compete. That means you're going to go after it. That might mean a formal offer, like you're actually going to write up an offer. It might just mean you're going to talk to the seller. You're going to say, hey, I think I'd be a good buyer for this property. Or I think I can pay you a lot of money. You're going to compete. Like, real estate is a competitive business. You got to compete for it. And if you do that consistently, you're going to get the keys to certain properties. You're going to win the keys. In other words, you're going to get the deal. You need to use this time and your place in life to build relationships and buy relationships. Now we're going to move over to the $7,000, which maybe applies to more of you. If I had $7,000 to my name, that's all I had. I was trying to get financial freedom, trying to get into real estate. Here's how I would start. I would look into the FHA or 203K loan house hack. So most of you are familiar with what a house hack is, but if you're not, a house hack is where you buy a property and use it as both your primary residence, like where you live, and an investment property. So you might buy a duplex, live in one unit, and then the other unit you would then, rent out. Or you might buy a fourplex and live in one unit, rent the other 3 out. You might even live in a single family house and rent out the other bedrooms, right? One of my favorites is when you buy a house that has an extra unit, like just one extra unit. And then in the beginning, you live in the extra unit, you rent out the main house, you live for free. What a great way to get into real estate. And then why $7,000? Because these loans only require 3.5% down payment. And so you can get the seller to pay for your closing costs, which means that you can buy a $200,000 property for $7,000, give or take. You can also partner with someone. A lot of people don't know this, but if you have $7,000, but you can't buy a property in your area for $200,000, but you could buy one for $400,000, you can find another buddy who's got $7,000. He doesn't even have to live at the property. She doesn't have to move in. You each put in $7,000. Now you can buy a $300,000 to $400,000 property and you can house hack it. You can also partner on a flip. I'll throw that option out there as well. You can partner on a flip, and that means, let's say you want to, $7,000 for a hard money loan. If you don't know what hard money is there are companies that will lend to house flippers, and they don't lend based on your credit or your income. They just based on the house. It's a hard asset. It's not hard to get. It's just a hard asset. In fact, I have a hard money loan company. It's called betterliferef.com. We probably normally, unless you're really experienced, you're not gonna be able to do a loan for $7,000 down on a flip, most likely. But 14,000, maybe 20, much more likely, 25, 30, 40, 50, definitely. So you could partner on a flip with someone else. Even let's say you found somebody, you brought your 7,000, they brought 21,000, they brought more money, but because you're managing the rehab, you split it 50-50. Or they bring 50,000, you bring the 7, so you have some skin in the game, you split everything 50-50 at the end of the day. Those are real possibilities partnering on a flip. You can turn your 7,000, because 7,000 is not a lot of money, you can turn that into $70,000 within a short period of time by flipping houses. Another thing you could consider if you want to be more aggressive with your growth is use that $7,000 for a marketing budget. I thought of this idea the other day. Somebody can take this idea, by the way. I think this is $1 million idea. I'm going to give you guys $1 million idea right here. You guys ready for it? I bought a multifamily, a mid-sized multifamily, 24 unit in Cincinnati a number of years ago. You probably heard my story with it. I held it for a year. I had tremendous trouble with it. Like, I couldn't find a good property manager, couldn't find a good contractor. I was managing from Hawaii. I bought it in Cincinnati. I didn't know anything about Cincinnati. I ended up selling it a year later for the same price I bought it for, $600,000. The guy I sold it to, within a year, had it printing money and worth over double what he bought it from me. Why? Because he was local. He understood the market. He knew how to manage those properties. He knew how to find the good contractors. He was local. How many people have made the mistake of buying a multifamily out of state and then realizing later it was just a money pit because they don't know how to manage it? I would guess the majority of them. So here's what the $1 million idea is. You go and you build a list of multifamily owners that are out-of-state owners in all those cities over the past 6 months ago and 6 years ago, let's say. That's 4 units to 30 units, 4 units to 50 units. In that range, that's really difficult to manage. Most likely, all of those people are having headaches. So what are you doing? You now have a list. You buy a list, let's say, of that. And there's a website called listsource.com. You can buy it from them. So now you buy that list of 1,000 out-of-state absentee owners of mid-sized multifamily in the Ohio market. Now that 1,000-person list costs you $1,000 to buy. Well, that sucks. You got $7,000. That's what I mean. Use it for marketing. Now let's say you send a letter to every single one of them. Well, that costs you another $1,000. Then you don't have time to answer the phone. Like, you got 100 people calling you. Let's say you don't have time to answer the phone, so you pay somebody else $1,000 to answer the phone. Now you got $3,000 spent, but you got 100 phone calls. Out of them, you find out that maybe 30 of them are actual serious about selling. You're going to underwrite them, and you're going to figure out which one you want to offer on and compete on. And let's say out of them, 20 of them you want to compete on. And out of those 20 you want to compete on, you go and make formal offers, you talk to the seller, you build a relationship, and 3 of them accept your offer. Now, you could buy them, but you're going to have the same trouble they did. Out-of-state investing is incredibly difficult unless you build a machine there, which is fine. So what if you wholesaled it? In other words, what if you went and found that local investor who's in that market already and said, hey, I got this 20-unit apartment building under contract right now for $1.7 million. Do you want to buy it for 2? And you make a nice $300,000 profit on the spread. That's a real thing. You do that 3 times with 3 large multifamily, you're making that much? That's $1 million. That's $1 million idea. All right, moving on. $70,000. You got $70,000. You got a decent job, probably. You've been saving up money for a while. That would get you 20% down on a rental property. $70,000 would get you just basic stuff. Go to a local credit union or a bank, or you could call it Better Life Ref and say, yeah, I want to buy this property. And again, ideally, I would not buy out of state if you don't have to. I'd aim for something that could cash flow, which is probably not a single family house in this market. Probably gonna be looking at something more like a triplex, fourplex maybe. But it's not, not always the case. Maybe you buy a nice vacation rental in the Smoky Mountains, right? $70,000 would get you a nice down payment on that. Or a nice condo in Hawaii that you could Airbnb. Another option, 20% down plus the rehab money on a flip. So you find a house for $200K, you got to put down, let's say, $20K, $30K for the hard money, maybe less. and then you cover the rest, the $50,000 of your rehab budget, you just cover on your own. And then you flip the house and you turn that 70K into 110K, 120K, depends on how good the flip is, 130K. So you can multiply your money and you can use that to do that several times. And then maybe even do the strategy, what I call like flip one, buy one, or flip one, hold one, which where you flip a house, make 50 grand, use that $50,000 to fund a rental. Do it again. Use that 70,000 to flip a house, make 50, use it to buy a rental. So you flip one, flip one, hold one. And you can do that until you have financial freedom. And you're just using that same $70,000, recycling it over and over and over inside of a flip. And of course, a similar concept, but instead of flipping, you can do the BRRRR strategy. $70,000 is a great amount of money to do the BRRRR strategy. That is where you buy a property, you rehab it, you rent it out, you refinance it, and then you repeat it. Now, a couple things you have to be careful with. BRRRR, you really have to nail your after repair value. And in a market that constantly changes, you can't be sure on that. So you just want as much evidence as possible that it's going to be worth a lot more money than what you paid for it. So that's the first mistake that people make. They overestimate what their property's worth. And the second problem is people go way over budget and over time on their rehab. It doesn't take them $30,000 or $40,000 to fix it up. It takes them $140,000 to fix it up. And all of a sudden now when you do the BRRRR, you have no money to finish the project. So you got to make sure you have enough cash reserves, be good at managing projects, maybe partner with someone on the first one who understands how to estimate rehab costs. But if you do it right, the BRRRR strategy is a great way to rapidly expand your portfolio. Now let's talk to the big one, $700,000. You got some good money. Most likely you're a doctor, lawyer, entrepreneur, business owner, something like that, executive. The first thing, most people who have that kind of money, unless you inherited it, which we can talk about that in a second, most of those people are extremely busy. You also make a ton of money at your job. You probably should not invest in real estate like everyone else. Because if you can make $700K a year at your job or $1 million a year at your job, you're just going to distract yourself by trying to buy duplexes that take up all your time, right? You'd be better off investing in your own business if you're an entrepreneur, or getting better at your job and making more money. You really want to make sure that you're in real estate for the right reasons. If you're printing money at your job, maybe focus on that. Doesn't mean you shouldn't invest in real estate though. That's where, the majority of open door capital people are in this boat. They invest with me because they know that I can give them a decent return, or they hope I can give them a good return, and they don't have to do any work. So how a syndication works is that you have multiple people who all join together, and it might be 100, 200, 300 people maybe even, and everyone takes their money and pools it together into one giant piggy bank or bag of money. And then we use that bag of money to buy a big, huge apartment building or a mobile home park or self-storage. So you're going to use that to buy something like that with a syndicator. So that's what I do. That's how I built my portfolio. I don't own most of my deals. I have 13,000 units, sure, but I've got 2,500 investors who have partnered with me on them. So they actually get the majority of the profits, which is cool. You can invest in real estate. If you got 700 grand, you can invest in real estate, still own the majority of the deal, but not have to do any work whatsoever. That's why I recommend, if you've got that kind of money, maybe just find 2 to 3, 4, 5 different people you can invest with, or different deals with one person that you just really trust, and spread out your risk a little bit. Now, it's not risk-free. There are deals that I've invested in syndication and I haven't lost my money per se, but I might lose my money. There's a good chance I'll lose it because the market changed so drastically the last 2 years. Not open door capital deals, but I invested with some friends of mine. And it's not their fault. The market just rapidly changed on them and they got caught with their pants down a little bit. So I'm not saying this is a risk-free thing to do, which is why I'd spread it out over different deals with different operators. And don't invest anything that you can't afford to, don't invest your last dollar. I inherited 700 grand. I'm going to put all of it in one syndication and hope that it works well. That screams dangerous, right? You want to go slow here. If you want to do it yourself, let's say you inherited the money, or let's say you just don't like your job and you just want to invest in real estate and you're good with that. Okay. 100K down on a $400,000 small multifamily. That's 25% down. You buy a property. Notice I didn't say put $700,000 down. I said put $100,000 down, and then do it, learn. You're going to make a ton of mistakes, and then you're going to repeat. There's also funds that produce a fund that's just a 9% cash flow. There's no equity, it's just cash flow. So you can just put money in with me, I get you 9%, and you make cash flow. Cool. You could do that. Now you're not going to get the upside, so your return's, blocked. But that's not bad. I just invested with a buddy. I just gave him $450,000 on a deal, and I'm just an interest rate. I'm just a lender. I'm making 10% on my money. But I was like, you know what? I got this 450. I just sold a big property. I got 450K right now. I want to put it to use. I don't have a deal right in front of me at this very second. I'll take 10% for a little bit. So I did a 2-year loan with them for that. So you could do that as well. The $700,000 person can take their money and then find somebody that they believe in, that they trust. And maybe you start small, right? Maybe it's like you find that person who's got the $700, but man, you can tell they've been to every, they've listened to 100 episodes of the Better Life podcast and the Bigger Pockets podcast. And they went to the Better Life conference. You met them there at the Better Life Real Estate Summit. And they were like just on fire telling you all this stuff. And you were super impressed with their knowledge. And then you told them to follow up with you after the event, and they did, and they got back to you, and they were super professional. And then they found a deal, and they ran it by one of their professional friends, and they said it was a good deal, and they wrote a letter of recommendation, and then they brought it to you and said, hey, my buddy says it's a good deal. Would you want to partner with me on it? And you're like, let me look at the deal. And then you run the numbers, and you realize it's pretty good, and they need $50,000. So you set it up in a way that, you can kind of maybe guide them a little bit, or at least like fund them on a small level, test them out, and they turn that $50,000 into 100 for you. And now you found yourself a little partner. And notice like these all just kind of tie in together like that. And that's the beauty of real estate, y'all. Like there's room for everyone at the table. There's room for everyone to win, and there's different roles for different people. So if that was helpful, let me know in the comment area. And appreciate y'all. Hey, do you want to know the fastest way to level up your real estate investing? Get your goals quicker? It's not watching some other YouTube video, though I'm sure you can learn there. It's not scrolling social media, though I hope you learn there. It's getting in the room with people who are actually doing real estate. And there's one room in 2025 you cannot afford to miss, the REI Summit, June 1st through June 3rd in Austin, Texas. Now, this isn't your typical sit and take notes conference. The REI Summit is about walking away with real tactics and strategies that you can implement immediately, whether you're landing your first deal or you're scaling your portfolio to this next level. In fact, just like last year, every session begins with the word how to. Because you're not there to be entertained. You're there to learn new tips, new strategies, new ideas, to meet new people, and to take those things back home with you and use them to build more wealth and passive income so you can live a better life. But here's the thing. Prices are going up, and we regularly are going to keep raising prices as we get closer to the event. So don't wait. Lock in your spot right now before it's too late. To register, go to reisummit2025.com or go to my Instagram, Beardy Brandon, shoot me a DM that just says Summit, SUMMIT, and I'll send you all information. This event will be the game-changing event that you've been waiting for. I'll see you in Austin. And that, my friends, is the show. Thank you for tuning in. And hey, before you go, if you enjoyed this episode or if you just enjoy the show in general, please consider leaving us a rating and review wherever you listen to podcasts. We really do value your feedback, and we read the comments. We make future decisions about topics and guests and everything else. Plus, it helps us reach more people, and the more reviews we get, the more people hear it and watch the show and share it, and it's awesome. Last but not least, please head over to social media. Consider befriending me, following me, subscribing to all that stuff at Better Life and my personal page at Beardy Brandon, especially over on Instagram, YouTube, and really everywhere else. So thank you again for listening. I'm honored that you would bring me along on your journey toward building wealth through real estate investing without losing your soul. Now, this show is about living a better life, but if you want my opinion on what it takes to live the best life ever, just go to abetterlife.com/best life to hear some of my views on life and spirituality. I think you'll like it. abetterlife.com/best life. With that said, thanks for listening to the show. We'll see you next week.